Hello folks, John Najarian from Investitute.com. Let's take a look at some questions. Some of these are from customers of Investitute. Some of them are from just regular friends out on Twitter, maybe even some haters. Let's see. First question is from Wayne LeBlanc. Wayne wants to know, am I still in Lulu calls? Yes, Wayne, I still am. What I did was, as many of you know, is I sold puts, hands out, sold puts on that big drop in Lulu. So I feasted on that fear because those puts all went out worthless. Stock dropped down to 49 bucks or thereabouts. It returned back to as high as 53 and change this week. So obviously any of the puts at the 49 strike or even all the way up to 51 or 52 are probably worthless. So I've closed out my put trades and I do still have May calls. I am selling other May calls against those, which puts me into a call vertical spread. You want to learn more about it? Come on over to Investitute. We'll show you all about it. All right, but thank you. Now let's see. I've got Charles Sterling, I think it is. Charles is asking me, what's my target on Amazon? I think that's it, Andrew, right? Target on Amazon? Charles, I don't really know. 2,000, sure. 1,500, sure. Do I sound like I'm being dismissive? I guess so. But Andrew and I have been in this trade for a very long time. Andrew's called it better than I have, but I've been lucky enough to be long it for all of 2017 as we've run up like this. It's up 28% so far this year, guys. So what did I do? Into earnings last night, I took off all my longs because they were too deep in the money. I'd rolled several of them up several times, but nonetheless, they were big, expensive calls. No sense putting that money at risk into earnings. So what I did was I put on new call spreads out in about the June timeframe. So I'm still long in Amazon, still like it. Price target, you know, I just think it goes higher. How about that? David Gonch, D Gonch, so the @ symbol D Gonch is his Twitter handle. He says, where are we going to be at the close? Dave, I don't know where you're going to be. I know I'm going to be on Jet Smarter flying down to Florida to meet with a bunch of clients. I've got a client dinner tonight. I've got a client breakfast tomorrow, an afternoon meeting, and then I fly home. So that's where I know I'm going to be. As far as where are we going to be, I know he means the market in general. You know, we'll go back and forth with this continuing resolution. It's kind of boring to me. It's not something I'm playing desperately for the bull or bear case right now. Sorry about that. Alex Martinez, he wants to, let's see, he's at AMRT310, I think, is his Twitter handle. Hey, Alex. Bears draft picks, what do you say? Always need offensive linemen. Always, always, always. Also, never trade your pick unless you get value for it. Don't just trade for a spot in the draft. I think that's stupid. For the most part, when you can get a guy and lock him up for 4 or 5 years, including that option year, I think you do it at the cheapest price you're going to get a star athlete at in his whole career, because you're getting them for a maximum of about, what, 23, 24 mil? That's how much they'll get a year when you factor in the signing bonus on their second contract. So take advantage of it while you can, because the NFL negotiated away the rights of people they didn't even have. That's a good trick. David at Strike Eagle is his Twitter handle, and David says, what is the latency of our algos? Latency, let me see. Well, David, we run an 8 gigabit circuit now to the internet. So if you have a 1 gig connection, thumbs up to you. We're a lot faster than that. We're the equivalent of a manhole-sized pipe, and your equivalent is that. So much bigger pipe means we see it faster. There is no latency. We see it virtually as it happens from the data centers at the Mahwah, New Jersey, or at Option Price Reporting Authority, OPRA we call it. We see it as it happens. So there is no latency to our algos. Doesn't mean we're always right on our read though, because sometimes people that pay a lot of money for calls are wrong. Sometimes people that pay a lot of money for puts are wrong. But we're following really big, really smart investors into these stocks. That's why the hit rate is so positive, and that's why you see me doing my dance on CNBC, because we're, knock on wood, seeing a lot of winners as big money is investing in those bullish or bearish cases. Doesn't mean John and Pete are that smart. Pete's smarter than me, by the way. But it does mean that we read the tea leaves better than anybody that I know. All right, let's see. Got another one. Let's see. Another nice guy says, no question, just thanks. I'll let Andrew put that Twitter handle up because it's a long one, but thank you. Anybody that gives us a little love instead of hate, always love to hear that. Thank you for continuing to follow us. One more. Let's see. Zachary, is that Biblar? Z Bibler or Bibter? Sorry, Andrew will put it up on the site, but he asks, what other books do you recommend about weeklies? I think nobody knows time decay better than Keith Richards. So I'd recommend Life, autobiography of Keith Richards. Partially read by Keith, partially read by Johnny Depp. Then they both kind of either got too stoned or whatever and they couldn't finish reading it. So they turned it over to an actor to finish reading the book. But it's a fabulous read. Gives you a lot of ideas of time decay and maybe even a few skull rings here and there. I liked the book, but as far as good books, there are a lot of them. Jim Bittman has great work that he's done. Russell Rhodes over at the SIBO has done great work. I, of course, am partial to what Pete and I have done recently with 22 Rules of Investing. You'll start seeing those commercials running 24/7, folks. But I'll give the other guys credit, especially Russell Rhodes and Jim Bittman, two guys that really know what they're talking about with options. I'd say check those out. So with that said, thanks for joining me. I hope you enjoy the vlog. I hope you enjoy the videos. And like I say, it's always good to be somebody who understands how options work rather than just following Pete or John or Dan Nathan or anybody else that seems to know what they're talking about options. Don't just follow the trades that they recommend. Make sure you know how the option works before you invest in it. Time decay can be your friend if you know how to use it. Over at Investitute, that's what we teach people how to do every day. That's it. Have a great weekend. I'll see you next week.